Boom. We are alive, ladies and gentlemen. Thank you for joining us this evening. Monetary meditations. One of the fun parts about today's episode, I know you're going to be super excited about this. It's a pretty big deal. I actually have no idea what I'm going to talk about, but that's one of the fun parts. I think discovery and learning is not necessarily always knowing what's going to happen when you start a hypothesis. You really kind of allow all the ideas to have at least some seat at the table within the argument as you build your thesis so that you can come to what's probably the most substantial result in anything you're trying to learn or discover through the process of research and study. So that's what we like to do on a daily basis with a few different topics, although on this channel we stay focused entirely on venture capital and I guess the broader concepts around wealth and value. So to all the new Bear family that joined from the Around the Blockchain show, thank you guys for jumping in and hitting that subscribe button and the little bell every time, because that way you'll get notified when we do these live streams and we dive in a discovery mode. So we're just going to gear straight to Bitcoin. Technical analysis is always like a really kind of attractive idea, right? You see the colorful charts, the prices are going up and down. It's one of the first things that I was like, hey, this looks like a really interesting thing to try to understand. Right, I'm a big fan of music, and when we're looking at maybe even greater degrees or another pattern recognition, trying to understand the patterns of an instrument or the advanced rhythms of an Indian song, what you're doing is trying to garner your ability to make critical decisions based off key points of data that you don't need to have the full story, but you can get pretty close just by knowing a few key points within that story. Almost like the structural integrity of a storyline or something. You need a few good points in there, right? But so when we're looking at technical analysis, you get all of this noise that comes through on a day-over-day basis. This is things like, oh, what's going on in the news, what's going on with all the inflation rates or the consumer product index. And that stuff's actually extraordinarily important, but it's noise within the signal that you're trying to find, which is what is a good investment thesis, and who and what have others done, or what and how have others done to be really successful with their time and their energy, and at the end of the day, their investments. Bitcoin falls beautifully and has consistently fallen into the asymmetry category, where you have this large amount of room for upside and you're only always limited by downside. Now, the volatility in Bitcoin is hopefully going to be reduced over time, right? To some degree, to have a nice monetary standard at scale, you would want it to somewhat level out a bit so there's not so much dynamic change between sending and receiving an asset. But that's also what makes it fun. If it didn't have that potential, the majority of people wouldn't show up looking for this like the value that they perceive, which would be the change of price, right? But most people are attracted to the price change as the value instead of the underlying concept. And really, okay, so if what we're doing is kind of getting an overview of the price and value action when we're looking at a chart, some of the fundamental stuff that we go over that I think Glassnode provides great work on here too, looking at the supply, the characteristics, and understanding, probably even more importantly, what does the conceptual basis of a distributed financial ecosystem mean over the course of the next 10 or 20 years, because it's pretty freaking fascinating, right? Going through, you can see all these new companies jump up, and it wasn't, I think the idea to think it's just all about Bitcoin is probably a little selfish, right? It means that distributed systems like Ethereum or Avalanche, Solana, are actually all stronger when they work together, right? And that's a really important part about distributed systems that I think gets away and pushes towards a much more unified concept of what decentralization means. That it doesn't have to just be one. And as a matter of fact, we don't want that. Like, nobody wants just one of anything. Like, even if Bitcoin is a distributed system itself, you need others for it to follow at least the base core line concept. And that value to me is really what drove my investment thesis. So when we're looking at trading ranges, it can become really exciting, especially when you see huge gains like this in such short periods of time. One of the key factors is finding, again, these long-term accumulations, these peak moments of fear that seem to strike the start of the bull market, and then the macro cycles that are giving us a clear indicator of how well we should trust our long-term thesis. So we commonly look at things like the volatility index, the NASDAQ, the S&P 500, and the dollar index, because the monetary whatever you want to call it, experiment that we've been playing around with has been running for quite some time. So this this function of using charts to look at the kind of the perceived value of the ecosystem is really interesting. Now, I thought Kathy would brought up a great point in her previous market release about, this entire ecosystem from Bitcoin, Ethereum, all the derivatives, all of our exchanges, all the value locked and moving around here. We took billions of dollars of shorts and that got liquidated during that drop, or sorry, longs that got liquidated in that drop. And the ecosystem kept going, and tragically, if you were to try to do that to the S&P 500 right now, it would break. So one of the things we've been looking at and talking about since 2016, if you knew me, we didn't start Arcane Bear until 2017, but I decided to change my mind that I didn't think we were going to really see the market crash, and there was a reason for that. So one of the things that I think has been driving the bull market is not just that Bitcoin's actually a potential for an inflationary change. It's part of the deflationary nature of technology. So this is a longer, broader concept. This is why we're doing it on a Saturday night. We're still gonna look at all of our favorite ideas, but I think that the broader context here is what I want to cover. So we know that there's underlying values in businesses that are being built, right? Maybe you're a shoe company. Heck, I didn't realize Louis Vuitton had been around for 100 years. I was like, well, these guys, they used to make some of the first travel bags. Oh, that's fantastic. There's a business model, right? So the S&P 500, although it's not Louis Vuitton, it is a representation of things people find valuable. For better or for worse, lots of people find stupid valuable too, and that has nothing to do. I find stupid shit valuable. Heck, or interesting rather, we'll say as well. And so that's the point of the story, is that because value is a perceived notion to some degree or another, you can have mild or wildly fluctuative movements in price that are totally irrelevant of the underlying fundamental of why something is valuable, right? The price can go anywhere, but we've been constantly aware that the M2 monetary supply has been increasing and dramatically. So here's the S&P 500 on the 6-hour chart, and in the private group, you guys will have been following this with us. The S&P 500 has been clearly closing well above its previous trading range and has now broken out of the rising wedge that we were talking about. And this was a concern to us for Bitcoin especially as well. So we're looking for two key moments. Do we see a distribution moment where it comes back into the range? Because there's a lot of contention right now around the rest of the markets. And this is the crazy part, is when we look at the rest of the markets, there is a direct relationship with the monetary supply that's being printed and the market movement itself. So one of the reasons why Bitcoin has such a unique value proposition, aside from the price changing violently and creating enormous gains for those who invested early, we have to pay attention to the underlying aspects of the market, how it got to the place that it is, because it got here through generating wealth for individuals. Again, some products are good, some products are not so good. Some products are a great idea, and then what we ended up seeing was the downside of, like, now there's plastic straws everywhere and turtles' noses. So there's always a downside stream where we're getting convenience and consumer preference, and we're not really paying attention, and all of a sudden, a few years has passed. So back between the early 1990s, the S&P 500 had this beautiful run up, right? This is what they called the dot-com bubble, right? This was the dot-com bubble. And then what happens is technology is actually producing an extraordinarily high productive sentiment. So it's getting better, it's getting faster, it's getting cheaper. So technology is at this point in the early 2000s is increasing massively. Like the fact that there's cell phones and there's satellites, and oh wait, this isn't sustainable. We got to build wire for everyone, and it's only 56K. Oh my God! And then you can have your password stolen and money stolen and fraudulent stuff. And before you know it, the 2000s.com crashes over, and we're well on our way into the madness of the 2008 market cycle before it crashed down again. Now, what we have is the madness. So in 2016, I changed my sentiment from I thought we were going to see a crash, which we could have seen. We could have actually seen something a bit more mellow here. But what this is, again, for those of you that study Wyckoff with us, again, first what you'll notice is that the upthrust of the buying climax turned into a much larger trading range. And we've seen this multiple times before too. So distribution itself often ends up being just part of a larger trading range before it goes even higher. But this monetary supply, they're going to keep increasing. Now, I was doing some kind of cursory research around some of the world's biggest foundations. These guys manage $70 billion. Here's another $80 billion, another 40, 60, 20, 50, 100. Like there's hundreds of billions of dollars sitting on the sidelines in foundations. And what's unique is that one of the problems we have is not necessarily that the monetary supply is increasing, and that's a lot of people have been making profits, and a lot of that profit gets locked up in shares and stocks. So it's a fairly illiquid market. And we have something similar in Bitcoin. So what's unique is that during this big market cycle downswing, you've had trillions, or at least the appearance of trillions of dollars of value wiped out overnight, and everything still works great, right? Bitcoin on like a fundamental level, we lose, where is it? Oh, here it is. Yeah, all of a sudden we have this massive drop off in total hash rate, and the mining difficulty drops dramatically. Oh, and look, everything's still working great. Like the fundamental underlying value proposition of a decentralized system in the world of finance is actually working, and it's running in somewhat conjunction with the fact that we've printed our way into the future, right? I believe that one of the downsides of and here's where the argument gets difficult, right? Is if you talk about monetary inflation, a lot of the Bitcoin maximum suckers, you can't print anything. Well, the downside was if we'd used shells, well then shells don't work. We use money, and then well that doesn't work either. We use a fixed or finite supply money, and that makes great sense for money, but it still doesn't make sense for currency. And you have all this capital locked up, not really doing anything. I was looking at the Bill and Melinda Gates Foundation, and they have, $46 billion. That means they could effectively give away $10,000 a day every day for 1,300 years or something like this. So that capital inside of that fund is not going to be doing a whole lot within the next few years even. Like they'd have to try to give it away real fast. So usually what they try to do is invest in innovation. There could be an argument made here for why there's a downside in doing that. In that case, check out Brett Weinstein's podcast on Odyssey. As a matter of fact, on our links down below, you can find us on Odyssey now apparently too. Just because I think you should support other people who are having intelligent conversations. I like Brett Weinstein, and I'll probably make a longer video on that anyways. But also note that you can now follow us on Odyssey too. So if you want, you can join on Odyssey, type in Arcane Bear. I don't assume we're going to get kicked off YouTube, but both these two have been demonetized, and some of their videos have been removed for what I believe to be is just scientific conversation. And if we have to live in a world where scientific conversation is not allowed, I'm not very stoked about that. So please check out their videos and support them, and check us out on Odyssey as well. And just in case, who knows, follow us somewhere else. Follow us on Twitter, all the social media channels now. We just happened to decide to use Odyssey when they did as well. Seems like a fun move. Why not? We'll play the El Hanan game, right? Okay. So where was the point of this going aside from the intermediary? Shout out to Brett Weinstein and his partner. Oh yes, okay. So monetary supply, price, value, and the kind of weird thing that we're probably about to go through for the next 20 years in terms of a new. Hold on, wait for it. Yes, there we go. Lights are back on. A new functioning system. We can't just keep printing to oblivion, but we're at a really unique point where, because so much capital is being locked up in these foundations, you have technology like Bitcoin and computers continually trying to drive prices down through cheaper costs of production. We're going to hit a wall sometimes, and what you may see over the course of the next few years is a much bigger trading range take place, where we start to come to terms with the fact that the reason why the markets have just been able to go up and things have been able to get more expensive, generally speaking, is because we've made so much progress in what's possible. Like with this cell phone, I now hold in my hand more computing power than like all of the world's armies in World War II, something like that, right? That's an incredible feature of an incentive-driven society. I think it's paramountly interesting, at least to reward and incentivize interesting conversations and the productivity that might come from that. So I'm not opposed to the growth of the financial system, and to do that, you would generally want to have more supply. There's a downside of who creates the supply, because then they're kind of in charge, and corruption seems to be drawn to anywhere there's money that's in charge of supply and demand. So it's not a great quality, and Bitcoin helps solve some of these. But in the meantime, a lot of what's driven this growth here is the interest of, okay, well, a house has some type of value, right? And a car probably has some type of value too, or at least has a price tag that most people can recognize, but it probably has some type of value for, comfort, convenience. These are pretty valuable things to a lot of people. But because the value is so subjective, what you end up getting is this moment where, as humans grow, the population grows. Population growth is probably going to peak out here, and then we're going to see a longer, bigger new trading range of people building with probably much more innovative tech. We're going into a time over the next 20 years where I think it's going to be really difficult to grasp the rate at which technology changes. I'm already impressed to a very, very high degree. Like the cell phone, right? Maybe I think myself too silly of a monkey, but it has all changed so quickly from transistor radios to what we're doing now. And that's an impressive feature of the human innovative spirit and creative and also destructive mindset. So the point of what I wanted to get out through this kind of live update was that when we're looking at the long-term assessment of things, it's really easy to get caught up in the intermediary, like, oh, it's a down market, it's a bear market. Technically, for the S&P 500 as well, it's only ever been a bull market. And you should kind of expect that for a growth curve, unless there's something catastrophic. And we didn't get hit by an asteroid here or here. We didn't get hit by an asteroid yet here either. The pandemic, look what only the pandemic, this is all they did. All they had to do is increase the monetary supply. And the reason why I think this is important, and I'm kind of trying to, through a word storm of ideas, coalesce on like a theme here, is that once value gets locked in a company, like I think the Wellcome Trust was created in 1936 and it still has $30 billion, right? Like it was created way back before any of us were born. Like the chart doesn't even go back far enough to take a look. This only goes back to 1994 for the S&P 500 right now. And you have companies that control $23 billion. Again, that'd be $10,000 a day for like, what is that? 750 years or something approximately. That's an incredible amount of capital flow that's just locked somewhere. So they've started to take it upon themselves to just print it and try to get it out. Now, again, I don't agree with this. I don't think that this is a good idea, but that's what's happening right now. That's why you see these huge moves in the market. And I think people really started to realize it in 2008. And in 2016, for me, it clicked. We're going to see a market melt up. Now, what does this mean for Bitcoin? Bitcoin is a really unique asset, but we have tons of these ideas because we should. So you're really early into some of the most interesting asymmetric relationships between inflation and deflationary qualities. It's like a really interesting story. And I think that if you're like, one of the ways to be successful about what you want to do is to be interested in it, right? Just making a bunch of money here is actually quite easy to do if you know what you're doing. And that's why we show up. I made a lot of mistakes going between 2013 to 2017 and into 2020, right? But each of these mistakes brought me to a better and better understanding of the thesis that I was trying to work towards, which is how do I get the most for the least amount of effort, effectively speaking? And where am I the most interested so that effort that I'm making is highly engaged, productive, and hopefully morally driven at the best of cases, right? At least that's hopefully the case for all business models, but it doesn't always end up that way. So what we get to do is research all this really fascinating stuff that's kind of beneath the price and focus on the value. So I think what's interesting here is one of the reasons why I go over the charts frequently is because a lot of people are interested in these particular ideals. But what I like is the fascinating undertones of what's going on as well. So we'll do a little bit more charting here. Just a quick update. Thank you guys all for enjoying my random Saturday night rant. I like to, because I don't know where we're going with the conversation, I'm just like, okay, this is the monetary meditation moment. Like, where do we end up? What can I learn through this process? So thank you guys for going through that with me as well. Okay, the Bitcoin percent of and all balances on exchanges right now. This is one we like to use just to get a general market grasp of, are we in accumulation or distribution? From May 3rd onwards, you definitely started to see the massive increase in supply, and it then also created the decrease in price. So supply and price are actually even more intrinsically linked. This is why people talk about market manipulation. Fundamentally, Bitcoin is fantastic. We know it has all the value proposition we want for an asymmetric upside, and this whole sector, generally speaking. And again, the more correlative moment as we get closer and closer to the stability of Bitcoin at its price function, at least, is again the supply and demand relationships, which has been noticeable again since the start of the halvening, decrease the supply that was being created of Bitcoin on a day-over-day basis for all the miners. And we started to drop here in the last week, as well as prices have started to stabilize. So it's very likely that we will see an inversion of that here. There could be something that would change that. You would see likely a big jump, but as you get closer and closer, we can see that the open market supply has been decreasing pretty consistently the last few days. So we'll keep an eye on this going over the weekend. We know that as this decreases, it also increases volatility as well. So we could be seeing volatility to the upside potentially here too. Now, and also to the downside, if someone also wanted to if we jumped back up to here, that would be downside for sure. You would see it very quickly. So from an on-chain standpoint, this looks good. Just on a kind of a fun basis too, I think that, we just try to measure our understanding of the long term here. And again, we're not that far away from like a pretty riskless entry, which is fascinating to me, right? So, and this is one of the difficult parts too. I think that the shorter term investor has understanding that between 2019 and 2020 was like the best time to buy Bitcoin, right? Because it was still in this green area. Now there's a few ways we can look at how we suspectly reduce our values on risk. Risk is a really hard one to adjust for, often because when things go wrong, they go dramatically wrong very quickly and in ways that you couldn't have never anticipated. And that because you could not have ever anticipated it, it's like a systemic crash moment. Right, so we've seen that, but we haven't seen that in Bitcoin. So every year it goes further, it actually gets less and less likely too, which is a productive normal for understanding randomness. Now, again, that's the downside is, okay, look, we could say all swans are white until one swan is black, and then now we don't know that all swans are any particular color. Maybe there's a red swan for all we can know. So once the thesis is invalidated, it's actually invalidated, and it presses the sides of your of your mindset open. Just like, okay, well, good. So where does this thesis function through time? And through 2018, 2019, 2020 was a great time to effectively acquire Bitcoin. And it's very noticeable on the price point here too, is that here's the cycle from 2017 to 2020. We have this beautiful small trading range here that we took advantage of in the Bear family. So we see a larger trading range that had taken place here, and that just to justify and actually then further qualify that thesis, when we look back in time, what do we see? Oh, we see the same thing. We see this here on Bitcoin, this asymmetric upside, nice price explosion. You come down, you had a small trading range that took place here, your first SOS backup, and then you had the larger trading range, which became the fundamental start of the next bull market, SOS, LPS, SOS, LPS. So we see that there's a frequency of events here that have occurred multiple times, and we're like, oh, well, does it keep happening? Yes. Oh, it does. Okay. So what we're witnessing is actually likely a cycle of interest of growth itself as well. This is probably a more fundamental pattern, and lo and behold, it is. S&P 500, the same thing. Here is a reaccumulation pattern between 2000 from what they first, the dot-com crash was the bubble, markets are speculative, the 2008 cycle, like we don't know what we're doing, the markets don't work, and then they're just going to print money forever. So this is the downside is, well, who's in charge of the money printing? Well, that's a pretty good question to ask. Technically with the blockchain space, we kind of are, right? We get the opportunity to participate in it. Now, if you were back here and you could have participated in mining Bitcoin in 2011, 12, or 8, 9, 10, 11, 12, 9, 10, 11, 12, excuse me, then you were productively participating in the growth of the ecosystem, that not just not just financially buying or selling Bitcoin. It became a productive aspect of keeping the chain functional. Now it's much harder to do that, but look, we've still seen this asymmetric growth. How big can it go? Well, we could compare it to other big markets. We know that there's trillions of dollars of wealth locked up in just trust funds and some of these, right? So we know that there's a lot of value out there that's seeking some type of shelter. So are we going to see a repeating pattern? And well, then the likelihood is yes. We could see a repeating pattern and go much higher. Now, this is the thing, right? Okay, we could come lower, great, but I still think we're going to go a lot higher. So these downside only represents opportunity to buying, because one day, like let's say over the next 3 years, let's imagine it does this too for fun. Let's say Bitcoin does this. It comes back down, it drops to 20, it rips up to 59,000, it comes back down to 40, goes back up here, does this, and then before you know it, it's on its next bull market run to $300,000 instead or something, and you see a much longer accumulation pattern here. Cool, great. I don't know, but when I compare to what did the S&P 500 do, well, it took 20 years to to resolve this single trading range, and literally for 20 years you could have just bought at any particular moment. You could have invested your entire life. Had I just been investing every day or every month of my life playing the same strategy here and never once worried about the price, I would have done actually really well at the S&P 500 too, following this same strategy of just accumulate assets. And so I think that the underlying point here is to really address like the thesis more than the price, because the thesis is the value of I think why the success is possible. Otherwise, you get caught up in the day-to-day. These market movements can wipe you out. Like here we are in the 6 hour, we're going to this trading range. Is it a spring? Could it be redistribution? Well, yeah, it looks like redistribution potentially too, because you've got this big potential head and shoulders. So we could see this quick move down to 20, like 819, but we could see this much larger trading range take place here too. So what do I care? That's why we buy spot. Unless you're crazy and like to play with fire, which I like to do, you can do that as well. But I don't suggest it necessarily. So I've been really trying to hone in on what's most valuable for most people. Because effectively we want the thesis to work for everyone without them having to change their life learning how to chart and to recognize these bigger market cycles, because you technically don't need to. You could go, well, there's a pandemic, I should buy whatever freaking asset I can get my hand on, right? And that's the same thing rings true. If you look at this, because I think, hold on, and I think that to some degree here too, guys, check me if I'm wrong, the .com bubble was also had an isolated incident somewhere right around here. I think it was September 11th, if I'm not incorrect, that was like the top of the market. Let's take a look here. So there are some really interesting pathways of the human psyche that can be a lead indicator for our thesis as well. So I believe this, yes, this is September 11th. This was the exact peak of the top of the market, September 11th. Beautiful rounded top here, multiple times. Boom, boom. Yeah, and even, so here, look at this too. Notice the kind of head and shoulders. We have this in Bitcoin right now too. Like, look how similar that is. Jesus. Look how similar this kind of head and shoulders pattern looks between the S&P 500 and the right like this. Now, it didn't have that much more room for downside before all it did was continue upwards. I mean, we could make a speculation here that what we'll witness is actually a bigger, more abstract trading range that goes like this, and you have this is basically your PSY now. If you're that just a hypothesis, anyways, or not even a hypothesis yet, just a side conjecture, because I've been going through and I've been trying to think about, well, what about back here in '97 when there was no Bitcoin? What would I be doing? Well, I would be buying into the market, right? Oh my God, tech is amazing. This is so cool. We've figured it out. Yeah, we're all rich. Everybody's buying Lamborghinis. And then there's a lot of people that got in at different points, right? Now, if you could have recognized the same thing, well, oh man, this is amazing. I'm getting a deal. Everything I thought that was going to be part of the future is still part of the future. We're all going to be driving electric cars one day anyways. Like, you have to be a very forward thinker to think that in 2003. But you would have made an extraordinary amount of money long before Bitcoin was ever created. And it was just following a simple strategy of, look, the monetary system is likely going to be inflated for probably a bunch of years to come. So let's kind of plan on that. That's what they've been doing. We don't have any evidence to suggest to the other effect that that they would do something different. So let's not suspect that they're going to, that they're going to just keep printing. What's going on here? Let's get rid of this now. Okay, so that was kind of fun. The end of the market week is nice. The VIX has calmed down. The NASDAQ, again, peaking up and new highs too, producing new highs in the NASDAQ. Again, this is that market melt-up theory. I'm interested to see how long it goes. And I think because of deflation, it can go longer than I ever imagined possible. I still think with the S&P 500, we could see an easy doubling from where we are. But after our conversation already today, I'm not gonna rule out the fact that, or the potential that we could see something like this over the next 3 years here. Instead, as everything calms down, becomes more normal, that we continue the rest of our market cycle. I'm not sure. But we've seen stuff like this before. We've seen it here. We've seen it in Tesla. Tesla was another great example of those long-term reaccumulation patterns. We were going over that retrospectively. Let's actually take a look at Tesla for fun. So Tesla had a few really interesting, look at this. Tesla this year. Okay, so this is Tesla this year. Here's back to 2011, 2010. Tesla this year was a nice, clear 13x, extraordinary performer. Just goes to show how well tech does when everyone's kind of forced to stay at home and change their mind about what they think is cool technology. Let's go back and look at 2011 through 2013. So here's the fascinating story, right? Here's Tesla back in 2011 at $4, $3. Are you kidding me? This is fantastic. This is a fantastic entry price. So you had approximately 2011, 2012, and 2013, where every year you could have bought, let's say, $2,000 worth of Tesla. We're just going to use this hypothesis as a side example because we're happening to use Tesla. Bitcoin, any tech company kind of works in the asymmetry if you get it right. If you get it wrong, you just lose it. So it's $6,000 in investment you would have made and approximately a price of $5, right? So you've got 6,000 at 5,000. So you're buying around 20. You got $6,000 divided by 5. You're getting around 750. Wait, I'm horrible at math. Let's just use a calculator. Tio sucks at math. It's like 9:30 p.m. or something. 6,000 divided by 5, right? So you got 1,200 Tesla stock. There you go. So you now end up with 1,200 Tesla stock over the course of a 3-year investment cycle, which is like, yay, I've got 1,200 of something, right? Now, at one point, what gets difficult is this moment here. Well, first off, look, this could have been a tricky one, right? Didn't this look like distribution, you know? Here's a tricky one. Look how tricky this trading range is. For anyone that has been studying Wyckoff with us, first off, look at how tricky this trading range is. PSY, here looks like a clear up thrust. It looks like you're getting a sign of weakness and that you're about to get distribution here, and then bang! Super tricky trading range there. Okay, so we'll fast forward through time. So through 2014 through 2017, you had like a range-bound moment where you excessively built a trading range that had 100% up and down cycle. So from any top point of an up thrust or a secondary test, you had approximately like a 70% spread, which is extraordinary, right? And people would often think, oh my God, why didn't I take the profits of my 1,200 Tesla here at $55? Because my 1,200 times 5,500 from the the $6,000 we started off with is now worth $600 or $66,000. Geez, I can't even see that well right now either. Okay, so we continue through time, right? This is just a waiting game. All we do is we have to buy once. We're going to ignore if you just had continued to buy all the time, right? Had you just continued to buy this, and again, this is the weird part of a strategy, is that you could have averaged out a great price. Now look at this trading range too. Tell me that you wouldn't have gotten confused thinking that this was potentially distribution before just kaboom. To some degree, again, what we're trying to do is really gear everyone up for how they can be the most successful with the least amount of effort. And I think this is the best way to do it based off all the retrospective studies we've done. And now to a whopping change to where we are today because of the, so here's 2020, by the way, too, which you had a huge run up for Tesla. And this is a really interesting, because we've seen an SOS and an LPS like that. So imagine this is Bitcoin's accumulation cycle, the big one we were looking at, and this is the run up to 64, the drop down to 20 before a much higher move. And we've actually seen that. So I'm not going to, this is why I'm still bullish for Bitcoin, even though we could kick 20K, like we could come all the way back to the top of this big trading range that we've been looking at for the last, a year and a half now. I mean, that was always kind of the sentiment. We could come back down to this area. So you would imagine that this was Tesla through that time period. Again, time or scale and variant, you always have to remember the function of scale and variance if you want to enjoy this conversation with me. So we had this big run up, this drop back down into the pandemic that basically acted as an SOS and an LPS off of a multi-year trading range here as well, right? So this is why I compared it to Bitcoin's like $20,000 to the $3,000 to the breakout. You had $74 down to $32. So not quite as volatile, but nonetheless, the SOS and the LPS, so the run up for Bitcoin for 60 and back down to where we are now effectively, maybe a slight bit lower, but look what it started. And it's, again, this is the difficult part is tell me like how much Wyckoff you'd have to study here to not think that this was going to be distribution and just to end up seeing a reaccumulation after, like with a down cycle spring before it just blows up, right? So it's really important to understand the broad spectrum retrospective aspects of going back into history and looking at what's happened. So today, again, had just that one purchase back in 2011 through 2013. So 3 years effectively of following the strategy and then doing nothing for the rest of the years afterwards, which was a $6,000 investment, got you 1,200 Tesla, and that's 600. So it'd be 678 times 1,200, right? So 678 times 1,200. So you'd be sitting on approximately $813,000 worth of Tesla share, and all you had to do was, over the course of 3 years, invest $2,000 per year into something you found interesting, like, hey, cool, electric cars. Now, you had to be super early and get it right. So we're relying on asymmetric upside here. That's why we picked Tesla. It's a tech company. For those of you that don't know that, it's a tech company. They just happen to make cars, but it's a tech company. So the point of this is the strategy has functions in multiple sectors. We clearly focus on the Bitcoin one, but you can use areas or ideas like Tesla as examples of what happens when we're looking for a trading range. Here's a beautiful trading range taking place and something interesting. And it's a rising gradient bottom trading range too. So for those of you that have been studying with us for quite some time, you'd recognize how powerful market sentiments like that are. And then look, boom, 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 this huge buy up, this huge markup signal. And this would have easily tricked me. I would have definitely thought that we would be going lower here, right? Like this looks like it looks like distribution to some degree, especially this point here. With a last point of supply, you'd think that boom, we were going to go lower and fall downwards. But anyways, we didn't. We saw more buying power come in and then increase again, create a whole new trading range, another multi-year trading range. So effectively, you have almost like two big chunk trading ranges here as well, and that's why we saw this return back to the previous support cycle before going much higher. So the Wyckoff trading ranges, and this is why we always go over scale and variance. There's a bunch of different ways. The multi-year cycle is always the best. That's why with Bitcoin, like even though we're looking at the 6 hour, even though we're looking at the 6 hour here, it's not the most effective. Like it's significantly less reliable to know if this is going to be redistribution or accumulation when we clearly know that the cycle threshold is usually multiple years. And we've seen this on every episode of these, especially the bigger market movements. The seminal market movements in between are always really interesting. So anyways, that was fun. I hope you guys enjoyed that tonight. Just a little bit, just a little bit of abstraction there. I didn't want to be too specific on like, oh my God, Bitcoin is gonna go. I'm very bullish on Bitcoin. Even if we come down to 20K, like this just represents more accumulation opportunity at this point. So play long-term game. Thank you all for joining us on the live stream. Just wanted to go. I wanted to go through that kind of abstract thought. I don't think they're going to stop printing money. I think they're just going to keep printing. And I don't necessarily know that there's a threshold where we see big market cycle downs. Now again, we could see that. Like clearly we're up super freaking high in all of the markets. So we want to be cautious and aware of that. If we were to see a big down cycle, if people were to get scared in the broader markets too, it would definitely not bode well for Bitcoin. I don't think it would bode well for anything. We're still in pretty high levels of fear for most people, and for good reason too, to some degree at least. Not at least about the fragility or the fragile nature of some of the systems we've created on this planet through time. So that's a real story. So the volatility is always important to keep an eye on, but we have been decreasing over the last year, consistently getting higher or lower highs and lower lows as well too. So that's nice to see. I think we'll find some normalcy over the next little while. Anyways, it's Tea with the Arcane Bear. We'll keep that. We're going to go to the city tomorrow. So I think you guys are going to get a vlog from me about changing my mind, because I didn't go to Bali, and I want to let you know why. I think it's always helpful to be able to change your mind when you find new data that's important to keep on. Thank you guys all for joining us. Give us those thumbs up to all the people that joined recently. Thank you. Appreciate that. Leave your comments. Let everyone know who you are and what you like about the show. And thank you guys always for being so supportive of my abstract nature. The fact that it's like I don't even know what we're going to talk about. Like I just have like a rough sketch of a fairly, I don't know, let's say broad view. I'm still discovering what it is we're learning too. I don't know. So that's a really fun process for me. So thank you guys for that. We'll see you again on the next episode of Tea with the Arcane Bear. Boom.